A very good morning to you, traders. Welcome to the Flow Show, Friday the 5th of December. We're at the end of the week. Nearly pub time. We'll see what happens the rest of the day. We've got some bit of data out, old data, but it's PCE data, so pretty relevant for the Fed. At least it will confirm whether they should have cut in October or not CPI data, but we'll find that out later on today. Right, let's get cracking, and going to start with a bit of data out of Japan, and not good news. Oh no, you've got the calendar set up. There we go. Boom, boom. Household spending data coming in a bit on the soft side, one could say, falling 3.5% on the month. It was expected to rise 0.7%. Household spending coming in year on year, down 3%. So that's not good either. So a little bit of negative data for the Bank of Japan to worry about. Not that they're that bothered, apparently, because we've had another sources piece out from Bloomberg after they rehashed the Reuters piece yesterday. There was another piece out overnight, said that sources saying they're likely to hike this month and leave the door open for more. They said a hike would still leave rates at levels to support the economy. People say that the Bank of Japan, or this is other members, is said to be aware of how Ueda's Monday comments would be viewed. They said that the BOJ is going to check the data. Market moves up until the final decision next week, 18th, I think it is, the BOJ. So looks like it's going to be a done deal that we get a hike. So there's going to be very little to trade if that is the case when we get to the Bank of Japan, except how hawkish or unhawkish they are moving forward from that point. Still seeing the yen getting affected by these headlines, so there's still a little bit of room to trade in that. Dollar yen made a fresh low, but it's bounced back above 155 as we speak. The head of Lloyds Banking says that the UK budget has cleared all the uncertainty. I'm uncertain that he knows what he's talking about if he thinks that's been cleared. We'll wait and see what happens in the rest of the data. Some more data out from Europe or Germany. Factory orders a positive 1.5% month on month. Year on year, they came in down 0.7%, which was not as bad as expected, minus 2.4%, and prior minus 3.4%. So a little bit of a pickup there. We had Challenger layoffs yesterday out the US. I'll put it around the calendar today, folks, which was a bit of a hefty one, shall we say, 71,000. But it wasn't quite the 153,000 we got the month before, which we knew was going to be chunky. If you remember, there were some big layoffs announced in October. So still, these are running at some pretty hefty numbers here, which we know we've got the ADP and everything that came in softer. So we know that this has been running pretty steady. Those were the government cuts going through that Challenger, or the layoff announcements. Remember, this report, it's intention to lay off. It doesn't mean all those people are eventually going to be laid off. Some could be moving to other jobs. But as you can see, the trend has been pretty high for the last couple of years, reflecting what we've seen in the jobs market. Then on the flip side, we've got jobless claims, which came in below 200,000, 191,000. It's been a while since we've seen a sub 200k number, but there we go. We got one. Continuing claims also pulling back 1.94 million. We round it up by a pip, which was round about what we saw last month, 1.943. So again, this indicator is still not showing us any potential jobs weakness there. The Atlanta Fed's Q3 seaweed guessing, tea leaves, says that Q3 growth is going to be 3.8%. That's down small from the 3.9% previously. Morgan Stanley are the latest to chuck in their Fed rate call for the Fed to stay unchanged, handily doing that 5 days before the meeting. They now see a cut. Shock horror. More bank forecasts not worth the paper they are written on. Potential Fed head Hassett says he thinks we're likely to see a cut at the next Fed meeting. He's on the guessing game as well. Bit of a no shit Sherlock comment. he says we'll take a rate cut about 25 basis points, and that the Fed chair, the next Fed chair, needs to be a data responsive person. So he's not looking for a 50. He says he'll take a rate cut around 25, which could give an indication that maybe he's not going to be Mirren style dovish if he gets the top job, which might appease markets a bit. Might not appease his boss, though. He might have talked himself out of the job with that comment. US Treasury Representative Greer says there are problems with the US MCA trade agreement. We already have adjustments to some of these challenges, but we want to make sure that Canada and Mexico aren't used as an export hub for China, Vietnam, Indonesia, among others. So that is, as we already know, going to be the broad basis of what happens in the US MCA. Not so much how they cement trade between the countries, but making sure that Mexico and Canada aren't being used as backdoors for cheaper goods from China and the like, and other things like drugs as well. Russia's foreign minister spokesman has been on the wires talking about a Ukrainian weapons factory in Denmark. Says it poses the risks of further escalation. They're still picking and poking at Europe over what's going on there. Macron, he's been caught out apparently, according to reports in Germany's Spiegel. Macron has apparently warned that the US could betray the Ukraine. That was apparently picked up in a leaked leaders call. Macron is at the moment over in China, so it's been a great time to have that news dropped on the wires. And that's about it as far as the news goes. Bit of a quiet one. We're not seeing volatility picking up much at all. Just looking at the vols in euro dollar. Let me just call them up for you while I'm waffling. We've had a little move under 5%, which is not good news at all. Let's get that up. There we go. These are the vols I look at. You can get them on our platform. As you can see here, these are the 1 month vols, 4.98%, under 5%. Well, at 5% is getting pretty quiet. Under 6% is getting pretty quiet. Going under 5% is going to quieten things down even more. We have had a 30-odd pip range today in the euro, but not much else going on. Cable as well coming right down. This was sailing up at 6-7% higher over the budget, but that's coming down as well. Dollar yen still up 8.20, so that's still open to some moves. What these vols mean, it's you can use them as a gauge in just how prices may move during the day. Yes, you can still get decent moves on big headlines and the like, but when there's nothing going on, this is when you're going to be watching paint dry a bit. So if we're heading into a low volt environment, which might just be a year-end thing, everyone knows what the central banks are doing. The ECB is not doing anything. The Fed are going to cut. We're going to see out the year probably with a bit of a whimper. Then things are going to quieten down. You need to know how to adjust to this trading. If we get this sort of volatility into the new year, then again, you're just going to have to look at how you trade. Daily ranges are going to come lower. Range trading becomes a bit more evident. Scalping becomes a better strategy because you're not going to be getting your 50, 60, 70 pip intraday moves potentially anymore if volatility stays low. So just be wary. This is what happens when central banks have had rate moving phases and they're all getting down to levels that they're going to want to sit rates at. That sucks out volatility because there is no expectation trade until the data starts telling us that something's going on and they may need to hike, may need to cut, and then we start seeing volatility pick up again. This is part and parcel of markets, folks. It happens in cycles. So get ready for it. If we see it, learn how to trade it. Right, so that's all the news done. As I said, we've got PCE coming in later today. Well, we did have durables, but again, this was old data, and that was a revision because it came out with a factory Orders, well, I think they just lumped it all in together. Durable goods came in, well, factory orders came in up 2%. Durable goods, that was all pretty much there or thereabouts. Nothing really to write home about. But as I say, that was all September data. So we've got PCE coming out today. Again, old data. I don't know why they've got factory orders on here again. Sometimes I wonder what they do with these calendars. So PCE, we're expecting core PCE to come in unchanged 2.9%. And they've got this here. It's coming out at 3 o'clock. Usually it comes out 1:30 in normal times. But at the moment, we're just lucky to get what we're given. So it's coming out later on today. Headline PCE, depending on what calendar you're looking at, is expected to come in at 2.8%, which is a pip up from 2.7%. So as I say, this data is September. We knew what the September CPI was. Inflation remained pretty sticky. It's expected to do so again. It won't or shouldn't change much for the Fed expectation trade for them next week. Unless there's a big old surprise coming from that. Fred, right, what am I looking at? Right, talking about the Supreme Court ruling. Yeah, it could come anytime. I'm not sure when. We will probably know when it's going to come, but I don't know at the moment. I haven't looked into that. What will happen if they rule against him? He'll do it another way, pretty much. What happens to the dollar is a fair question. When he was talking about lumping on big tariffs, we saw currencies weaken, Mexican peso, the like, spikes in the dollar. So it would stand to reason that if he loses this court case, we'd see the dollar dumping off even more than we are now. But then, as he's been saying, he's got other means and ways of doing that. So yeah, it's going to be an opposite of what we saw when he was lumping tariffs on. But yeah, when we get that, I think we had mentioned it was before the end of the year, but I haven't read up on that recently. Right, also we get the flash number from the Michigan as well, consumer sentiment. That'll be out. That's expected to rise. I think it's expected to rise. Where are we going? They put this stuff all over the place. Where are we? Can't see it. There we go. Well, they haven't even got it expected to rise. They've got expectations expected to rise, but I can tell you we are expecting headline sentiment to rise to 52 from 51 previously. So that might be they've just put that in the wrong column. It should be there. This one has been a little bit wobbly of late. It's not really collapsing, but it's just has been a bit softer of late. So we'll keep an eye on that. This is December number, so it should incorporate some of the sales period for November. So this number could be interesting for the Fed trade, depending on whether it's good or bad. Whether the consumer did have a good November, this might show up in these numbers if they were a bit expectant and things are okay. Keep an eye on those inflation expectations. 1 year prior at 4.5, 5 year at 3.4. They came down a little bit as well. Oh yeah, we've got Canadian jobs too coming in. So we do have some jobs data. Normally would be an NFP day, but obviously we're not getting that. So if you're trading the loonie, keep an eye on that as well. This one was a bit of a gangbusters again last month. These jobs, they've had 2 decent pickups after 2 wobbly ones. So market is expecting another negative, down 1.5 thousand or 1,500. They're expecting a loss of 5,000 last month, and it came in up 66. So that shows you how these expectations, which don't just looking at this, these expectations are pretty much pointless compared to what we've been getting. So I'll pay a blind bit of notice to those today, but we're expecting down 1,500. We'll see what happens. Keep an eye on the revolving door as well as to whether the moves are. Last month, the bulk was in part-time employment, up 85,000. As always, unemployment rate, that was a surprise drop to 6.9%, and that came even with the participation rate. I think it ticked up a point, if I'm not mistaken. yeah, it ticked up. So employment came down even while that number ticked up. So keep an eye on that part of the metric as well. Could be a bit of a mover for the dollar CAD, particularly if there's nothing else going on. And we'll have a look at that currency in a moment. Right, let's have a look. So as I was mentioning with dollar yen, these BOJ headlines still giving things a little kick down. We are seeing this pattern where we're seeing a bit of a selling in dollar yen and other yen pairs, less so in Asia, and then it's picking up in Europe, in the US. So we keep doing this zigzagging stuff down. We have broken that low, which keeps the bearish move going. We had this, I had this level around 154.5. Move it out a bit. So that just came across from this prior resistance that we had up here. So we have had a little look through it, but we've bounced again. Now we're not holding below this 155 level yet. We've still got this series, lower highs, and that was evident again yesterday, but things might change, at least in the short term, if we start knocking out some of these highs. It will potentially mean that we might have found a bit of a bottom, but this move here, breaking that low, shows that we potentially haven't found a bottom yet. But as I said, the volatility is still up in this one, so we're still seeing decent moves. 34s was a low, and we're now sort of 80 pips higher. So there's still movement in this one. I've been trimming my shorts down here. Did have a little add back earlier on at 94, 154, 94, just to see if we were going to hold this 155 level. Obviously we're not, so I've got to stop on that just above this high here, high of the day this morning above here. If we get above there, I'll be knocked out of that little add back, but I'm staying short because I don't see any reason why this trend should change at all. Into the euro, this one's been struggling up at this level that highlighted previously, just around this 116, 65, 70s, just been an old traffic area that we've knocked around previously. It was the prior high back in late October. We've had moves above. It's tried to hold above, but it keeps failing. So this is your key level at the moment. It really needs to build a bit of a base, and then maybe we're going to get a push onto the 50 fib and the 117 level. But if it can't make hay above this level, then it's not. And I think yesterday we saw, buyers giving up. We saw a pullback back to this old fib here in this area around 116, 30s, 40s. Solid bounce off of there. Buyers are trying again this morning, failing again. So I think the longer we go without cracking this level properly, then we're likely to see a steeper pullback, and that'll probably take us down, low 116s, 20s, maybe down to the figure, maybe even a little bit more. So this one is, I'll say, a bit on the clock, but as you can see, we're in a pretty tight range at the moment. Cable, similar picture. We had this move up, couldn't quite get up to 134. It's been knocked back. I know a few people have got levels around 70, so couldn't get above there this morning. We're heading back down. It's nothing is breaking. Okay, this move here particularly is still holding. Okay, into the figure 133.20s, and the figure is where you want to be looking for this. Really, you've got a bit of a pivot in the middle. You know what cable's like. It likes trading the double O's and the 50s. So really, you probably want to be looking 133, 134 for your next main move, whichever way that one goes. But yeah, it's not. It's tried again, hasn't done it, and now we're just treading water. Dollar CAD, seems as that's in focus. This is still looking bearish. People are having the trend lines here. We've gone through the trend lines. We're under the trend line. We're still not holding a break below this 139.40s. So this is becoming more important for me than the trend line or anything else. We did nick down to this 139.20 25, 30 area, which we've tested before. We've had plenty of moves down here before. Again, it's one of those levels that we've broken, but we can't hold it, and we've got back above pretty quickly. So we've had, over a good period of time, we've had a good test down here. So it is decent support, and the support is pretty decent from there all the way down to the 139 figure. This 38.2 just coming in amid some of these other price touches, shall we say. So this is going to be maybe a bit of a maker or breaker for what's going on in this trend. It will certainly put the bounce to the test that we've seen. I should really change that color, shouldn't I? Let's do that quickly just to make it a bit clearer, because I've got trend. No, actually, I'm going to get rid of the trend line because I'm not overly keen on it. So these lows down here, this is the 38.2 of that move. So it is a bit of an area all on its own, and that could be key. If we're cracking under that, then we might start eating them into this trend a bit more. This level I spoke about on face yesterday, 38, 60s, 70s. When we were back here, we couldn't get through it. We struggled to get through it for several months earlier in the year. So that is going to be an important test if we get down there. This level is a bit similar to what I've been highlighting in Euro Sterling, the 87.20. Again, another one of those. Let's put it on this one. Another one of these long-term levels that when you've been away for a while, here, support here, resistance here, all the way back years. When you've been away for a while, they tend to have an effect on the price if the price is just moving down. So we had a bounce yesterday, had a test and a bounce yesterday. The bounce very, very weak. So we're not out the woods any way, shape or form. But as we know from Euro Sterling, it can just go sideways along a level for days, weeks even. If we are cracking this one, there's still a ton of traffic all the way down to this zone here. So it's pretty hard to say, okay, if we break 87.20, we're probably going to run into trouble 87.10 and 87, 86.90, all the way down. So this is not one you can sort of, if you want to pick a level to trade against, you've got several. But the zone is probably more important down here because it's an area that we've messed around in plenty of times before. And it tends, again, to be a bit pivotal, a bit messy through here, but then we started holding it. So, yeah, it's if this is going to keep going, then this is where it's probably going to run into trouble. I still don't see why the pound should remain well bid for any significant amount of time. And as I mentioned in the chat room earlier, Euro Sterling holding this level could actually be affecting Euro dollar and cable. Often it's the other way around. If you get a big move in one of those, you're seeing Euro Sterling move. But this trades on its own merits as well, and it has its own techs. Some of these smaller levels may not have done anything, but we've hit a big one and suddenly it's paused, and so have cable and Euro dollar. So that's just one of those times where the influence can switch now and again when you hit a level that's significant in another pair, when you got correlations. Aussie Kiwi got put out of my little short that I tried in here at 114.50s. I only had a tight stop on that one. That's knocked up, so we're back above this old fib. Looking around again, this smaller, shorter term level around the 114.85 area. We just run into a bit of trouble there. If we're getting back above there, then every chance we're going to be looking at 115s again and see what happens from there. But very solid into that 113.90s area, 114s. So this one is continuing its bullish path. Right, guys and girls, you've got anything you want me to look at, then let me know, and I'll discuss that. Dollar MEX, that's still looking very weak, and I've got no change in my view. I spoke about this on Tuesday. It is looking weak. We've come down pretty quickly from that last 1850s test. So there is a possibility that we do get a break. I don't know if it's going to be a lasting break. The only way we'll know that is by the price action if it breaks. I'm still long a little bit here. Happy to stay so. but I'm also core short from way above. So if it does smash through and go lower, I'll be fine and dandy with that anyway. But I think if we do get a break here, it's got every chance of at least getting down to that 18 level, and then see what happens. That's going to be the important part. If we go down here and it bounces, what happens if we get back here? If it finds resistance against this, let me get my old pen out. So if we do something like this, hit that, bounce back up, and then, you know, find resistance in there, then there's every chance of doing that. But if we don't, if we just come down and go straight back up into there, we might do a bit of that, but it's going to be similar to what we had all the way up here, where we had these breaks of the level. You think it's going to go, and then you're back in the box. You think it's going to go, and then you're back in the box. So really, the important move will not be what happens here, but what happens if it bounces back again. And that will give you an idea of whether this move is a fake out or it's something more. So if you want to look at it on the wider picture, let's go into this one and hit that. So the wider picture, oh, I'm still on my drawing thing. The wider picture, we haven't changed this trend, okay? We've been in this downtrend since the start of the year. That hasn't changed. All we've done is spent 6 months going sideways. You know, we've had months, well, 4 or 5 months going sideways. We had it when we were support here, then we had a break, and then we've gone sideways again. So we've stopped the rate of descent that we had back here through this period, but it's still a very, very bearish picture because it's failing to bounce significantly and hold any bounces. So short term, it's looking very bearish. Longer term, it's looking bearish as well. But is it going to be a big leg lower, or is it just going to be another small break and then more sideways, or are we just going to have a fake break and then we come back into the box? So that's how you're going to look at it. Yeah, I'll have a look at gold derivatives. You've asked about location of recordings yesterday. We've got YouTube, you've got Twitter, you've got our website. All our videos are available on all the major channels. All you have to do is look up Forex Analytics, YouTube, Twitter, whatever, and you'll find them all. Gold. All right. So I was looking at this. I haven't looked at this for, apart from sort of, I had a bit of a cleanup actually this morning. So first thing I want to mention about gold is that, you know, everyone's doing techs on this area and, you know, fibs and extensions and all that. The first thing I want to say is, remember when we were just there and no one knew where the top was and no one knew where the levels were and everyone didn't know, people trying to pick tops and where the dips and whatever. Okay. All these lines were going on before we had all this price action. So all my lines that I put on here, as I tried to show people, is so you get an idea of what might develop further on. You don't need to wait until you've got price history to start putting in trend lines, fibs, and all this price action. You already had some idea of what levels might be showing up when this was developing. Okay, now I'm not saying it's not valid to have all tech on this period. It absolutely is. But you already had an idea what was going on back here. Okay, you don't need to wait to get to here to start finding your levels. Look at this 41.62 level. You know, I had that as a little purple line in there when we had this price action. Okay, and look how it's developed. We got above, or we held below, just below here. We got above, modicum of support, couldn't get below, then we broke it, then it's resistance, can't get through, then we break, and now we're holding it. So yeah, you can whack your trend lines on wherever you want. You can whack trend lines in here now, and you can have a fib to there that extends to there and all that sort of stuff going on, which is fine. If that works for you, that's great. But when you've got a market like this where we haven't had price, oh, get rid of that. We haven't had price action history in all this part of the move. you can look for these little clues, and that tells you how to trade it 2, 3, 4 months down the line. So we've got this zone now from 41.86 up to 41.20. It's $40, quite a wide zone. Okay, but you know, the price does a lot in this zone. You know, if you want these highs, well, you need to get above here. At the moment, you can't get above here and stay above here for too long. So now, instead of having a one-way market, we've got a two-way market, because there's people who are now looking at levels and thinking, right, well, I'm going to be shorting it at 42.40s, and I'm going to be picking it up 41.80s, 42s, 41.60s. So for me, gold, it's still in an uptrend. Again, a bit like the dollar MEX, but in reverse. We've had a strong uptrend, but it's now struggling to get up. It's not going up with the same speed it was. So it's a bit more balanced now. So if you're buying it and shutting your eyes and think it's going to 4,500, well, you might be waiting a long time. Conversely, now you're getting the clear areas where you want to be buying dips. The price action is making it very clear for you. No, Fred, I'm not looking at Dixie. I don't do Dixie. It's not anything that leads anything. Sorry, mate. I don't trade it. It's a basket, so I'm not looking at Dixie. Apologies. Well, I only look at Dixie if I want to make a broader point about the dollar, which right now I don't. So gold, if it starts holding above this 42.20s, then you might be getting a push higher. We've got this smaller level, 42.40s, then up towards this high, and again this little level in here that came off this price action back in October could be significant. So keep an eye on that one there. If we're getting above there, then you can start talking about these highs, because there's not a lot between there and those highs. So that's one to keep an eye on for that. Anything else? Just keeping half an eye on oil. Just see what's going on with these geopolitical headlines. It's still maintaining this bounce, but you know, not going anywhere in a rush. So the broader view of this is that it remains pretty bearish. You know, where your key levels are down here. If we're cracking back under these levels, then we could be on. That's something to watch for. I think if we get a peaceful conclusion, if we get a headline out the blue that the war's come to an end, I would not be a surprise. It would not be a surprise if we knock out these lows. But then that might be a dip buying opportunity, because then all the bad news is out and we can look at the grand rebuild, or whatever they want to call it. Right, you guys and girls got anything else? If not, then we'll call it a day for today. Nice early one on a Friday. And maybe I'll get back to watching the cricket if it hasn't finished already. Anything else? Last orders? Or I'll ring the bell. We'll have a quick look at 10 years. You read my mind, Rob. This one, again, just not doing an awful lot. We're just in the middle of this range. It's 4%, 420s. We have had these little moves out, extensions down to 390s, but we come back in here. I don't think this is going to change on the data, but it might bring a bit of a trade if the PCE is a big variable to what's expected. Depending on which way it goes, you might get a move up to the top of the range, bottom of the range, and that will obviously drag the dollar with it. The dollar has been under the cosh pretty much all week, so just see if that's going to continue today, or maybe that might have run out of puff a little bit before the weekend, and people might just be taking a bit of risk off the table. Right, I'm going to call it. Thank you very much, everybody, for coming to the Flow Show this week. Hope you've had a good week. Please have a great weekend, and we'll see you all on Monday. Have a good one.